Everyone talks about Nvidia now, but the real money was made before the hype, before the headlines, before the explosion, before everybody on the internet started saying the same thing. There were people who saw the opportunity early, and that's where the real money was made. So now the question is simple. What are the next AI stocks people might wish they bought earlier? Because AI is not slowing down. It is spreading from chips to data centers to software to defense to cloud computing to cybersecurity to automation. AI is not just one sector anymore. AI is becoming the engine behind almost every industry. And when a technology becomes that important, some companies don't just grow, they explode. Nvidia became one of the biggest winners because it powered the AI boom. It sold the chips, it became the backbone. And in the stock market, the backbone is where the big money usually hides. Not always in the flashy idea, not always in the company everyone is talking about, but in the company that everyone needs. That's the lesson. Follow the need, follow the demand, follow the infrastructure. Because when businesses need something to survive, they pay for it. And when demand grows faster than supply, stocks can move in crazy ways. Now, this does not mean every AI stock will become Nvidia. Most will not. Some will fail. Some will be overhyped. Some will run up too fast and crash hard. So this video is not financial advice. This is for education and research only. But if you are trying to understand where the next big AI opportunities might come from, you have to look at the layers of the AI economy. The first layer is hardware, the chips, the servers, the data centers, the cooling systems, the power demand, the physical machines that make AI possible. The second layer is software and data, because AI needs clean data. It needs systems that can organize information, understand patterns, make predictions, and help businesses make better decisions. The third layer is defense and security, because governments are spending serious money on AI, not just to make businesses faster, but to make military smarter, to protect systems, to detect threats, and to win the next generation of conflict. So today, we're looking at three types of AI stocks that could have serious potential. Not because they are guaranteed to be the next Nvidia, nobody can promise that, but because they sit in areas where AI demand could keep growing. And if the market starts rewarding them, they could become names that people wish they watched earlier. Stock number one, Super Microcomputer, ticker symbol SMCI. This company is not as simple as just saying AI. Supermicro builds high-performance server systems. And that matters because AI needs massive computing power. Every AI model, every cloud platform, every major technology company needs infrastructure. They need servers. They need racks. They need systems that can handle huge amounts of data and processing. That is where Supermicro comes in. While Nvidia makes the chips, those chips still need to be placed inside powerful server systems. They need to be cooled. They need to be connected. They need to be installed in data centers. And they need to run efficiently. That makes AI infrastructure a major opportunity because the AI boom is not just about one chip. It is about the entire machine around the chip. Think of it like this. If Nvidia is selling the engine, then companies like Supermicro are helping build the car around it. And when everybody wants the engine, the demand for the full system can rise too. That is why infrastructure stocks can move hard during technology booms. They are close to the demand, they are close to the spending, and they benefit when companies rush to build more capacity. But there is risk. Supermicro can be volatile. It can move fast in both directions. When the market loves it, it can run. When investors get nervous, it can drop hard. That is why this is not a stock you blindly chase. You watch the numbers, you watch earnings, you watch margins, you watch demand, you watch whether AI spending is still growing, because with infrastructure companies, growth is powerful, but execution matters. If demand keeps rising and the company can deliver, the upside can be serious. But if growth slows or margins get pressured, the stock can punish people fast. That's the real lesson. AI infrastructure can create huge winners, but you still need discipline. You don't chase every green candle. You don't buy just because people online are screaming. You study the business. You study the chart, and you wait for the right setup. Now, stock number 2, Palantir, ticker symbol PLTR. This one is different. Palantir is not a chip company. It is not a server company. It is a data intelligence company. And in the age of AI, data is everything because AI is only as good as the information it can understand. Bad data creates bad answers. Messy data creates confusion. But clean, organized, useful data, that is power. Palantir helps organizations make sense of complex information. Governments use data. Militaries use data. Companies use data. Hospitals use data. Banks use data. Every major decision today is connected to information. And Palantir's strength is helping organizations connect that information, analyze it, and use it for real decisions. That is why investors pay attention to it, because AI is not just about creating images or writing text. AI is about making better decisions faster. And that is exactly where Palantir wants to live. The company has strong government connections. It has commercial growth potential, and it has positioned itself as a serious AI software player. Now the opportunity here is simple. If more companies and governments adopt AI decision systems, Palantir could benefit because it already operates in serious, high-value environments: defense, security, enterprise software, data analytics. These are not small markets. And if AI becomes a must-have tool for every major organization, then companies that help manage and apply AI could become very valuable. But again, there is risk. Palantir is not always cheap. Sometimes investors price in a lot of future growth. That means the stock can be sensitive. If expectations are too high, even good results might not be enough. So with Palantir, you have to separate the company from the stock price. A good company can still be a bad buy at the wrong price, and a strong story can still become dangerous if people overpay. That's why you watch valuation. You watch revenue growth. You watch customer growth. You watch whether commercial adoption is real. And you watch whether the AI platform keeps gaining traction. Because if Palantir proves that it can become a core AI operating system for businesses and governments, then the long-term story gets very interesting. But if the hype gets too far ahead of the results, the stock can cool off quickly. That's the balance. Great potential, real risks. And that is exactly what makes it worth watching. Now stock number 3, BigBear.ai. Ticker symbol BBAI. This one is much smaller, and that means it is much riskier. But it is also the kind of name that catches attention because it sits in the AI defense and analytics space. BigBear.ai focuses in decision intelligence. That means helping organizations analyze information, forecast outcomes, and make better decisions. That can matter in defense, logistics, security, supply chains, and government-related work. Now, this is not Nvidia. This is not a giant company with massive profits and global dominance. This is a speculative AI stock, and you have to respect that. Smaller AI stocks can move fast. They can double quickly. They can also fall apart quickly. That is why risk management matters more with names like this. But here's why people watch these kinds of stocks. Sometimes the biggest percentage moves come from smaller companies, not because they are safer, but because expectations are lower, attention is lower. And if the company gets the right contracts, the right partnerships, or the right growth story, the market can suddenly wake up. That is what creates explosive moves. But you never treat a speculative stock like a guaranteed winner. You treat it like a watch list name. You track the news, you track the earnings, you track cash flow, you track contracts, you track whether revenue growth is real, and most importantly, you track whether the company can survive long enough to benefit from the trend. Because in small cap stocks, the story is not enough. The business has to prove itself. AI defense and analytics could become a huge market. Governments are spending. Companies are modernizing. Data is becoming more important. Threat detection is becoming more important. Decision systems are becoming more important. So BigBear.ai sits in an interesting space. But interesting does not mean safe. This is the kind of stock where position size matters. You don't bet the house. You don't fall in love. You watch it. You study it. And if the setup makes sense, you approach it with discipline. Now let's bring this all together. The next Nvidia might not look exactly like Nvidia. That is the mistake many people make. They look for another chip company only. But sometimes the next major winner comes from a different layer of the same boom. It might be servers. It might be data centers. It might be software. It might be cybersecurity. It might be defense analytics. It might be power infrastructure. It might be cooling technology. It might be optical networking. Because AI is not one product. AI is an ecosystem, and ecosystems create multiple winners. During the gold rush, some people got rich finding gold, but others got rich selling tools, pickaxes, shovels, transportation. Well, police, the same idea applies here. AI is the gold rush, but the money may not only be in the obvious names, it may be in the companies providing the tools, the systems, the data, the security, and the infrastructure. That is why investors need to think deeper. Don't just ask, what company has AI in the name? Ask, what company is needed if AI keeps growing? Who benefits from more computing demand? Who benefits from more data demand? Who benefits from more automation? Who benefits from more defense spending? Who benefits from companies being forced to adopt AI? That is how you find better ideas. Not guaranteed winners, but better ideas. Because the market rewards growth, but it punishes hype. And the difference between growth and hype is results. Real revenue, real customers, real demand, real profits, real execution. So when you hear someone say, hey, this is the next Nvidia, be careful. That phrase is powerful but dangerous. Nvidia became Nvidia because it dominated a critical part of the AI boom. It had the product, it had the demand, it had the margins, it had the timing, it had the ecosystem. So if we are looking for future winners, we need to ask, does this company have a real role in the AI future? Does it solve a real problem? Can it grow revenue? Can it defend its position? Can it survive competition? Can it turn hype into actual business? That is the difference between gambling and investing. Now for traders, this becomes even more important because AI stocks can be extremely volatile. They can run hard on news. They can crash after earnings. They can squeeze. They can fade. They can trap late buyers. So if you trade them, you need a plan. Know your entry, know your exit, know your risk. Don't just buy because a stock is moving. Ask why it is moving. Is it earnings? Is it a contract? Is it a sector rotation? Is it short interest? Is it hype? Is it Yale institutional buying? The answer matters because not every move is the same. Some moves are the start of a bigger trend. Some moves are just traps. And if you don't know the difference, the market will teach you the hard way. Now for long-term investors, the mindset is different. You are not trying to catch every move. You are trying to own companies that can grow over years. That means you care about fundamentals, revenue, margins, leadership, competitive advantage, customer demand, balance sheet strength, and industry growth. I can create huge winners, but time reveals the truth. The best companies keep executing. The weak ones fade away. So if you are building a watch list, don't just pick stocks because they are popular. Build categories: AI infrastructure, AI software, AI defense, AI cybersecurity, AI data centers, AI power demand, AI cloud, AI robotics. Then pick the strongest companies in each group. That is how you avoid chasing random hype. You build a map, and once you have the map, you can see where money might flow next. For this video, the three names to watch are Supermicro Computer, Palantir, and BigBear.ai. One infrastructure play, one data and software intelligence play, one smaller speculative AI defense and analytics play, three different layers of the AI boom, three different risk levels, three different stories. Supermicro is tied to the physical build-out of AI. Palantir is tied to data and decision intelligence. BigBear.ai is tied to smaller cap AI analytics and defense speculation. None of them are guaranteed. All of them require research, but each one shows a different way investors are trying to play the AI revolution. And that is the point. You don't need to predict the future perfectly. You need to understand where the future is moving. And right now, the future is moving toward AI. More computing power, more automation, more data, more security, more decision systems, more digital infrastructure. The companies that become essential to that future could be the companies people talk about years from now, just like they talk about Nvidia today. But remember, by the time everybody agrees, the easy money is usually gone. The opportunity is in doing the work early, studying before the hype, watching before the breakout, preparing before the crowd shows up. Because opportunities don't announce themselves. They don't knock on your door. They don't say, hey, I'm about to become the next big thing. They show up quietly in earnings reports, in contracts, in product launches, in customer growth, in market shifts, in charts that start to build strength before the crowd understands why. That is why you watch. That is why you learn. That is why you stay ready. Because in the market, being early is powerful, but being early and wrong can be expensive. So the goal is not to blindly chase. The goal is to prepare. Study the names, track the trend, wait for the setup, manage the risk. And when the opportunity is clear, you act with a plan. AI is not just a trend anymore. It is a major economic shift, and every major shift creates winners and losers. The winners are usually the companies that become necessary. The losers are the ones that only sound exciting. So ask yourself, which companies are necessary? Which ones are just hype? Which ones are building the future? And which ones are just using the word AI to get attention? That question alone can save you money and maybe help you find the next real opportunity, because the next Nvidia may already be out there, but it probably will not look obvious at first. It may look boring. It may look risky. It may look too early. It may look like something people ignore until the numbers change, until the demand explodes, until the chart wakes up, until everyone suddenly acts like they knew it all along. That is how markets work. First they ignore, then they doubt it, then they chase it. And by the time they chase it, the early money has already been made. So stay sharp, stay patient, and keep watching the AI ecosystem, because the next big winner may not come from where everyone is looking. It may come from the layer underneath, the company powering the system, the company organizing the data, the company protecting the infrastructure, the company helping governments and businesses make decisions faster. That is where the next wave could be hiding. And if you want to find it, you have to look before the crowd, because everyone saw Nvidia after it exploded. The real question is, who sees the next one before it happens? Follow and like I Knew Money Now for more videos just like this one.